Andy Hodges. Now, Old Mutual, Sasol and Pick and Pay stocks in South Africa hit new 52-week lows. And closer to home, Caledonia Mining Corporation downgrades its gold production forecasts. Do you want to know why? Well, don't go away. We'll tell you all on The Mint. Coming right back. As we said, the Zimbabwe Stock Exchange, after coming off a two-day holiday, is obviously trading pretty flat at the moment. If you look at current stocks, you can see that the all-share index is up slightly, 0.29%. Industrial index is also up the same amount, 0.28%. Top 10, 0.35% up, and of course mining 0.81% up. Look, I keep on telling you this, it's always good to look at the stock market as a source of an investment portfolio, because quite frankly, the stock market appears to be at least holding on to some of its gains, and it looks like in terms of inflationary pressures, it's keeping its value. Now, if we look at some of the stocks that gained yesterday, it's the old reliables, as I call them. Old Mutual was up slightly, continues on its upward trends. It went up 0.14 cents to close at 21.50. Now, Old Mutual appears to be a favorite of investors. There's no doubt about it. As much as the central bank put in a 90-day moratorium on selling of fungible shares, Old Mutual still retains value. And if you look at their numbers over the last forecast that they gave out, the numbers were pretty good. As well as, of course, that Old Mutual is the largest landholder, the largest property holder in the country. So that's a great stock to look at. Cassava Smart Tech was also up. That's also gaining traction with investors. Remember what I told you. Look for stocks that have underlying value and also have exposure across the marketplace. And also some of these stocks that I recommend to you also have exposure into other countries in Southern Africa. If you look at stocks that went down, there were losses in Meikles Africa. That was down about 0.04 cents, very slightly. OK Zimbabwe was down, even though Andy Hodges' tip still remains. Have a look at OK Zimbabwe to put in your investment portfolio. We feel the stock is undervalued. Otherwise, our comments still stay here on The Mint. Zimbabwe Stock Exchange, for you, appears to be a good investment hedge in turbulent economic times. Now then, Old Mutual, Sasol and Pick and Pay. In the past week, 45 of the 164 companies on the Johannesburg Stock Exchange fell to their lowest levels in a year. That's 27% of all FTSE and JSE all-share companies, and a frightening statistic, says Shauk Low, a portfolio manager at PSG Wealth. Here's a list of some of the companies that are now trading at a 52-week low. We're just going to pick a couple of them. You're looking at City Lodge was down at a 52-week low. Discovery is down as well. First Rand, owner of FMB. JSE, manager of Africa's largest bourse, Mr. Price, is also down. Nedbank and Netcare. As I said, they're all hitting 52-week lows. Now, much of the damage was caused by investor fears about the trade war between China and the US and emerging market troubles, particularly in Argentina. We're doing a story about that later. In truth, however, the local market has been suffering for some time due to South Africa's own set of problems: political infighting, the very weak state of the local economy, and problems with Eskom that have undermined investor confidence. Foreign investors have now sold 47 billion rand more in South African shares than they bought this year. Last year, at this time, they were net buyers of about 8 billion rand of local shares. Selling has left the local market at its cheapest level in years. The Johannesburg Stock Exchange is currently trading at a price-earnings level of 11 times. What does that mean? Well, it means that some of the stocks appear to be undervalued and maybe good buys. For those of you who dabble in the Johannesburg Stock Exchange, have a look at some of these shares. 27% of all shares on the JSE have hit 52-week lows. Could be a good buying opportunity. Well, anyway, have a look, as we always say. Now, U.S. markets. Now, Disney. I want to look at Disney today because Disney, as you know, Disney, they made one of the most popular movies in the world, Avengers. Disney missed Wall Street expectations in its fiscal third-quarter earnings report on Tuesday. The stock fell 3.7% in after-hours trading. Here are the key numbers. Now, earnings per share were $1.35 versus $1.75 per share, according to Refinitiv estimates. Revenue was $20.25 billion versus $21.47 billion. Now, Disney blamed the earnings miss on the ongoing integration of Fox's entertainment assets, which is acquired in a $71 billion deal that closed last March. The company's studio entertainment segment reported revenues of $3.8 billion during the quarter, representing a 33% increase from the same period 1 year ago. Disney's Media Networks unit reported revenue of $6.7 billion, which is a 21% rise in the third quarter of 2018. Now, just Disney Plus will launch in 2 international markets when the service arrives in November, the CEO Iger said. The streaming service will expand to additional markets over the next 2 to 3 years, he added. $2.79 billion at the global box office and surpassing previous chart topper Avatar's record. The success of Endgame, as well as other titles like Captain Marvel, The Lion King, Toy Story 4 and Aladdin, could help Disney earn more than $9 billion at the global box office this year. Now, European stocks traded lower yesterday as weak German and Eurozone GDP data reversed the previous session's rally on the back of US President Donald Trump's delay to further input tariffs on Chinese imports. The pan-European stock 600 was down 0.6% by mid-morning, autos taking a 2% hit as the majority of sectors and all major bourses traded in the red. Economic data released on Wednesday morning showed that Germany's GDP, gross domestic product, shrank by 0.1% between April and June, fueling fears of a recession for Europe's largest economy and likely denting investor sentiment. This weighed on the rest of the bloc, with Eurozone GDP growing by just 0.2% quarter-on-quarter, significant slowdown from the 0.4% growth reported in the first 3 months of the year. Now, that's important, and this is why we talk about central banks in Europe looking at reducing interest rates. You can see from those numbers, from the GDP numbers coming out of the Eurozone, 0.2% growth, which is very negligible. That really shows that the central banks are looking at ways to stimulate economic activity. And of course, one of the tools in their armory is lowering of interest rates. Now, in the UK, British infrastructure group Balfour Beatty was a standout performer on Wednesday, its stock rising 7.9% during morning trade, having hit its highest since 2002 after strong results. Shares of steel and mining giant Agrocol Mittal fell 4.9% to the bottom of the stock 600, erasing the boost enjoyed by the US tariff announcement on Tuesday. Let's have a quick look at Asian markets. Now, before we look at African currencies around Africa, just a quick comment. You can see that the interbank rate and the parallel market rate still appear to be holding water. There seems to be a very small gap between the two. In fact, the street market rate appears to be trading at around 10 to 10.5 against the dollar, whereas the interbank rate is still trading around 9.75, 9.79. Anyway, let's have a look at African currencies. Now, looking at markets against the US dollar, I want to focus on the Chinese yuan, because Chinese ofto yuan gave up some of its earlier gains on Wednesday as weaker than expected economic data tempered the optimism generated by a US decision to delay tariffs on Chinese imports. The enthusiasm ebbed more broadly as well. The safe haven Japanese yen strengthened again, a sign that risk appetite remains fragile. The yen fell on Tuesday after the US announcement. Remember, the yen is perceived as a safe haven currency. The fall in the yuan and the rise in yen mirrored analysts' views that the delay in tariffs, although encouraging, wasn't even close to resolving the US-China trade war. China's economic data, meanwhile, showed that the world's second largest economy continued to slow. Industrial output rose in July at the slowest pace in more than 17 years. The offshore yuan had jumped to a one-week high against the dollar on Tuesday, again after President Donald Trump backed off his September the 1st deadline for imposing 10% tariffs on remaining Chinese imports, delaying duties on cell phones, laptops and other consumer goods. The announcement came after renewed trade discussions between U.S. and Chinese officials. Now, elsewhere, major currencies were little changed. The dollar index, which is a basket of currencies against the US dollar, was down around 1% since the start of August. It was flat around 97.8. Investors are watching the Treasury yield curve, which is close to inverting for the first time since 2007. The euro again was flat at 1.1180, despite weaker second quarter German domestic product data. Moreover, the year-on-year figure was higher than economists polled by Reuters predicted. The pound sterling was also steady. It was last flat at 1.2056 and little change against the euro at 92.73 pence. However, current levels suggest investors aren't willing to take the pound away from the multi-year lows it reached last week. Again, what's affecting the pound, we all know, and we talked about it many times on the Mint. It's a no-deal Brexit. The deadline, 31st October 2019. Will the UK leave without a deal? That's the million-dollar question. Please, your comments on our Facebook page, Zim Papers TV Network, and of course on our website, ztn.co.zw. And of course, we've got something exciting for you on the 31st of August. We have a new show that's coming up. We're the broadcast partners for Dreamstar. So please don't miss ZTN programming on the 31st of August. We'll be streaming live from Dreamstar. I love the show. I think you've missed it in the past. So it's coming back onto your screens, coming live on ZTN. Now then, commodities around the world. Now, our main story today is Caledonia Mining Corporation. We're going to look at that after the breather. But in global markets, gold prices edged lower on Wednesday after the United States delayed tariffs on some Chinese imports, easing trade concerns. Although political uncertainties and lingering global growth concerns limited losses for the safe haven metal. Spot gold was down 0.1%. To about $1,499 per ounce as of yesterday morning. The reprieve in the trade dispute between the world's biggest economies provided relief for financial markets gripped by political and economic turmoil as Asian shares joined a global equities rally on Wednesday. Spot gold may retest a support of $1,480 per ounce following its failure to break a resistance at $1,524 per ounce, said Reuters technical analyst Wang Tao. Silver eased 0.1% to $16.95 per ounce after hitting a more than 1.5-year high in the previous session. Platinum slipped 0.5% to around $847.92 an ounce, and palladium also dipped 0.8% to $1,444.16 an ounce. This is good news for Zimbabwe metals, precious metals, because of course firm gold prices, I keep on saying this, great for our export markets. It increases our export receipts in US dollar terms. Now, oil prices. We did a story yesterday about oil prices and whether it will affect us on the pump. Don't forget, it isn't just the exchange rate that affects prices of fuel at the pump. It's also the price of oil traded on international markets. Now, oil prices fell on Wednesday on disappointing economic data from China and a rise in U.S. crude inventories, erasing some of the sharp gains in the previous session after the U.S. again said it would delay tariffs on some Chinese products, easing trade tensions. Brent crude was down 46 cents, or about 0.8%, at $60.84 a barrel, after rising 4.7% on Tuesday, the biggest percentage gain since December 2018. Profit-taking after Tuesday's sharp gains also weighed on crude prices on Wednesday, analysts said. This is why I keep on telling you about world markets and the interconnectivity between what's happening on those markets and what's happening in Zimbabwe. So I always tell people, please, keep an eye on world markets, keep an eye on the FTSE, on the Johannesburg Stock Exchange, on commodity prices around the world, oil, fuel, things like maize and also tobacco. It's important for you as a farmer to understand what's happening out there. That way then you can identify what's happening with your prices here at home. Well, that's it for In the Market. Now, after the breather, Caledonia Mining Corporation has reduced its forecast for gold production for 2019. You want to know why? Well, don't go away. We'll tell you more right after the breather. The Mint will be right back. Welcome back to the Mint, and this is In the Economy. Now, please keep your comments coming on our Facebook page, Zim Papers TV Network, and of course our website, ztn.co.zw. I want to tell you about something exciting that's coming up 31st of August 2019. We have Dreamstar live streaming from the Harare International Conference Center. ZTN are Dreamstar's broadcast partner, so don't miss that. There'll be fun and games, and hopefully we'll find some new talent to take the world by storm. Dreamstar, 31st of August, live on ztn.co.zw. Now then, I want to tell you two funny stories, because I read something yesterday and I thought it gave me a bit of a laugh. It's about toll gates. Now, you do know that toll gates have gone up in Zimbabwe to $10 every time you want to pass one. Well, like all Zimbabweans, I always say Zimbabweans are the most ingenious race in the world, on the planet, because what are they doing now? Well, combis and buses are driving up to the toll gate and they're dropping off customers at the toll gate. The customers are walking across the toll gate, jumping into the same bus on the other side, a similar bus, and driving to the next toll gate. That way then they're reducing the fare, because a trip to Marandera, if you go through the toll gates, costs about $18. But if you do it this way, the way that Zimbabwe's entrepreneurs are figuring it out, well, it only costs $8. Look, I'm not sure if it's good or bad. If you're traveling, it's probably good. If you're government, it's probably bad. You make up your own mind. Now then, Richard Branson, you all know who Richard Branson is. Richard Branson was quoted as saying, "Fun is one of the most important and underrated ingredients in any successful venture. If you're not having fun, then it's probably time to call it quits and try something else." Well, I can guarantee you, here on The Mint, we are definitely having fun with you every day at 10 a.m. live on ZTN. Now, founder of Virgin Group, which controls more than 400 companies, Richard Charles Nicholas Branson is known for his extreme lifestyle. In his documentary, Don't Look Down, he talks about his near-death experience when he tried crossing the Atlantic Ocean in a hot air balloon to break the world record. Branson is also a fan of kite surfing and went across the English Channel in 2012, becoming the oldest person to achieve such a feat. In his book, The Virgin Way, Everything I Know About Leadership, he writes that his desire for breaking world records and insane marketing is the base of how he runs his business. Did you also know that Richard Branson bought his own island in the British Virgin Islands? Well, there you go. This is going to be our series of eccentric billionaires. We're going to also do one tomorrow as well. But that's it. Richard Branson, owner of Virgin and 400 associated companies. Now we move to our main story. Zimbabwe gold miner Caledonia Mining Corporation earned $7 million on production of 12,700 ounces in the June quarter. But grade and power supply issues have cut its full-year guidance to 50,000 to 53,000 ounces this year. This comes as the world is experiencing a gold rally, but Zimbabwe has cut down its annual production output for 2019. Steve Curtis, chief executive, said the company's production was up 6% on the same period last year, while profit was 37% higher on lower production costs. Operating profit in the second quarter was $6 million, 21% higher than the same period last year. Indaka Majaka from The Mint gives us more.
Said production from 49% owned Blanket would be 3,000 ounces lower than previously guided this year. Net profit for the quarter increased by almost 800% to $23.3 million due to the substantial devaluation of the newly introduced Zimbabwe currency. Resultantly, the company ended up recording some cost savings and a large net foreign currency gain. Caledonia's Blanket ownership level was set at 49% in 2012, under the Zimbabwe government's indigenization policy. However, Caledonia is negotiating to buy a further 15% from one of the indigenous shareholders. Caledonia mining shares were trading at 7.69 cents on Monday. The company's shares have generally traded between 7 and 9 cents over the last 12 months. Caledonia has a market capitalization of $82.8 million. For the Mint, I'm Ndaka Majaka in Harare.
Well, there you go. Now, I'm joined by Ndaka Majaka, who actually did that story to talk about this. Like, you know, we're focusing on gold. We did the story yesterday about gold and about Zimbabwe not taking advantage of the firm gold price. Ndaka, it's a bit of a deal, this, because it also shows another area whereby power supply issues are affecting industry. But there was good news yesterday. I mean, let's beat our drum at least. The Minister of Energy seems to be coming through. Tell us about Caledonia. What's their issues?
All right. Things are not looking very pretty at Caledonia. They decreased their yearly output to 50,000 ounces from a projected 53,000. So this could be a bad thing, but the good part is they managed to maintain profitability, so that means they're managing to break even. The main issue was the issue of power. They were saying that erratic power supply affected production, but on the plus side, government moved to make sure that all exporters, miners specifically, will now be paying for power in foreign exchange. So I'm sure this is going to make the second half even better.
Yeah, but I mean, Caledonia, one of those companies that is investing in Zimbabwe. I mean, they're even sinking a new mine shaft, central shaft. Yeah. I mean, this is great news. I mean, they're trying to put their money where their mouth is, so to speak.
They are. It's a good thing, because the quarterly update says that the mining shaft is 85% complete. They expect year-end to be done. The other thing is they're also looking at other brownfield opportunities in Zimbabwe. They say that over the next 2 years, they're looking at investing over about $3 million in new brownfield projects. Right. So this is a good thing.
But I mean, look at their pricing. I mean, because they seem to be quite good at taking gold out of the ground. I mean, they're looking at a cost guidance target of what, $700 an ounce, $800 an ounce, against a world price of $1,400.
Yeah.
This is good business.
It is.
But we're not taking advantage. This is what's so annoying.
No, the problem is in the story that you presented 2 or 3 days back, government has not been taking advantage of the gold rallies over the past few years. In 2011, it was the indigenization issue. This year, it's a different set of issues altogether. But I'm pleased to say that the Minister of Finance, Minister Ncube, and the Minister of Mines, Minister Chitando, are working flat out to make sure that the country takes advantage of the booming gold prices globally.
Well, that was Ndaka Majaka, Mint reporter, just giving us a brief background on what's happening at Caledonia Mining Corporation, but also what's happening in general in the gold sector in Zimbabwe. And she's 100% right. The Ministry of Mines does seem to be seized with putting in the right policies in terms of growing our mineral production. So good luck to them. We're going to keep an eye not just on gold, but on also other mineral sectors around the country. We're also going to be looking at platinum soon, and also palladium. We want to talk about that. And of course, we're going to be talking to Zamasco to understand about the chrome sector as well. Anyway, that's about it for that story. So thanks to Ndaka Majaka. Now then, the world's largest atmospheric tower has been built for Nigeria's Dangote refinery. The huge atmospheric tower was built by Sinopec, a frontline energy and chemical company in China. Now, Dangote refinery and petrochemical complex is sited at Lekki Free Zone near Lekki Lagoon in Lagos State, Nigeria. The location obviously will facilitate easier evacuation of petroleum products from the refinery to global markets. Sitting on an area of 2,500 hectares large upon completion, the complex will be not only Africa's largest, but also the world's largest single-train refinery. It is expected to be producing 650,000 barrels of fuel per day. The planned annual products of the refinery include 10.4 million tons of gasoline, 4.6 million tons of diesel, and 4 million tons of jet fuel. According to the owner of the refinery, Aliko Dangote, the enormous project will cost between 12 to 14 million US dollars. Now then, Amazon. Amazon shares fell 2.5% last week, and they're continuing to tumble. That decline puts Amazon stock on track towards its longest losing streak in 13 years. The current sell-off in Amazon shares began after the company reported mixed second-quarter results. News that Amazon CEO Jeff Bezos sold $1.8 billion worth of shares also seems to have added fuel to the Amazon stock sell-off. Amazon reported strong second quarter revenue. The company generated revenue of $63.4 billion in the second quarter, a rise of 20% year-on-year. eBay and Spotify, if I had to compare, recorded revenue growth of 2% and 48% year-on-year respectively in the quarter. Alphabet, which is a member of Google, of course, and Facebook recorded second quarter revenue rises of 19% and 28% year-on-year respectively. Now, Amazon's second quarter revenue topped the consensus estimate of $62.3 billion. Now, Amazon costs have been soaring as it invests more in its fulfillment system and the expansion of its cloud computing capacity. For e-commerce companies, competition is shifting now from lower prices and broad product selection, to express delivery. This expectation explains why Amazon is acquiring more cargo jets and has bought rolling robots to help with last-mile deliveries. The sell-off we're seeing in Amazon stock also comes as the company faces regulatory scrutiny. The United States Department of Justice announced last month that it was conducting an antitrust review of some big tech companies. Amazon is most likely a target as it dominates the e-commerce space. Weak earnings, Bezos stock sale, and the DOJ review may be behind the current Amazon stock sell-off. However, there are also positives. For example, Amazon remains the clear leader in the global cloud market, which is on track to top $330 billion in annual revenue by 2022. Therefore, from a glass-half-full point of view, the sell-off may actually present a buying opportunity. How about that? Andy Hodges' tip. Is it a good idea to buy Amazon where it is right now? It looks like it could be a buying opportunity. Well, let us know more on our Facebook page, Zim Papers TV Network, and of course our website, ztn.co.zw. Now then, I always like, you know me, there's always got to be a smile on your face, and it is a beautiful Thursday. Now, the founders of Airbnb got their initial funding by selling their own brand of cereal. You're not going to believe this, what it's called. Obama O's was sold with the motto, a breakfast of change. Airbnb. Airbnb, the service that helps people rent out their rooms to travelers, was recently valued at $1.3 billion. Yet in its early days, angel investors were wary about investing in it. To raise money, the co-founders sold their own breakfast cereals. They purchased huge quantities of bulk cereal, pasted together cardboard boxes, and branded them as limited edition politics-themed cereals called Obama O's, Captain McCain, and Breakfast of Change. In 2 months, they sold 800 of them for $40 each and earned more than $30,000. Apparently, they made great sales on their Obama cereal, but had to eat the McCain cereal to stay alive. Well, who knows? Maybe you'll find Andy O cereal out there. Who knows? Anyway, there's a bit of a smile on your face for Thursday to get you going into the day. Now, don't forget, 31st of August, we have a major event for you. Dreamstar comes live on ztn.co.zw. You've got to watch it. It's a great program. ZTN are the broadcast partners for Dreamstar. And of course, we look at our other content. We've got Heartbeat, the only show that talks about health, not just with health practitioners, but also with you, health sufferers. And of course, what do we have? We've got The Chase. That's our interactive, live current affairs show, which talks about topical issues relevant to Zimbabweans. And of course, The Couch, the only sports show that Andy Hodges watches. And you can quote me on that, as well as all the other content that our ZTN newsroom puts up on our Facebook page, Zim Papers TV Network, and of course our website, ztn.co.zw. Well, that's it for me, Andy Hodges. This has been The Mint, and all I have left to say today is have a fantastic day. Look after each other, and you all be safe. Goodbye, and see you tomorrow morning, 10 o'clock.